Here is a summary of the Paychex Incorporated second quarter fiscal 2026 earnings call transcript, focusing on key financial metrics, management's outlook, risks, and important statements. Paychex Incorporated Q2 fiscal 2026 earnings call summary. Overall performance. Paychex delivered a solid second quarter for fiscal year 2026, marked by strong revenue growth and significant progress on strategic initiatives, particularly the integration of Paycor and advancements in data and AI. Key financial metrics. Total revenue increased by 18% year-over-year to $1.6 billion. Management Solutions revenue grew 21% to $1.2 billion, with Paycor contributing approximately 17 percentage points to this growth. Growth was driven by product penetration and price realization, though moderated by softer-than-expected revenue per client. Adjusted operating income grew 21% year-over-year, driven by higher productivity and cost discipline. Operating margin achieved 41.7% for the quarter. Diluted earnings per share, EPS, decreased 4% to $1.10. Adjusted diluted EPS increased 11% to $1.26. Financial position remained strong with $1.6 billion in cash, restricted cash, and corporate investments, and $5 billion in total borrowings. Operating cash flows, $445 million for the quarter. Shareholder returns, $514 million returned through dividends and share buybacks. Return on equity, a robust 40% on a 12-month rolling basis. Management's forecast and outlook. Fiscal 2026. Paychex is reaffirming its fiscal 2026 outlook, with the exception of raising earnings expectations. Revenue expects to come in towards the low end of the previously provided ranges for Management Solutions, PO and Insurance, and total revenue. Interest on funds held for clients, now expected to be at the high end of the $190 million to $200 million range. Adjusted diluted EPS growth, now expected to grow between 10 to 11%, up from 9 to 11% previously. Effective income tax rate, approximately 24%. Third quarter fiscal 2026 outlook. Total revenue growth, anticipated at approximately 18%. Adjusted operating margin, projected to be between 47 to 48%, reflecting higher year-end fees recognized in this quarter. Significant risk factors. Macroeconomic uncertainty. The current economic environment introduces some uncertainty into the outlook. Integration challenges. While progress is being made, the integration of Paycor is a large-scale and complex undertaking, with ongoing efforts in go-to-market, technology, and cultural integration. Softer revenue per client, a trend observed across multiple business lines, impacting overall revenue growth per client. This is attributed to smaller deal sizes and less upfront attachment at the point of sale. Insurance agency performance. Challenges within the insurance agency are currently weighing down the PO and insurance segment's overall performance. Highlights. Paycor integration. Significant progress made, with identified cost synergies now estimated at approximately $100 million for fiscal year 2026, exceeding the initial target. Revenue synergy targets remain on track. AI advancements. Paychex is aggressively integrating AI into its operational systems and overall DNA. This includes a patent-pending AI-powered knowledge mesh system, GenAI-powered employment law and compliance platform, successful agentic AI pilots handling thousands of payroll calls and emails with near 100% accuracy, reducing processing time. An AI-driven sales platform equipping sales teams with instant answers, tailored scripts, and prospecting insights. PO business strength. Achieving market-leading mid-single-digit worksite employee growth with near-record retention, driven by strong demand. Client talent shortages. clients continue to face challenges sourcing talent, an area where Paychex's solutions add significant value. Broker relationships, strengthening through the Partner Plus program and expanding with larger clients than initially anticipated. Client cost management. Small businesses are actively looking for ways to manage costs, aligning with Paychex's value proposition. Nelson Hall recognition. Both Paychex Flex and Paycor platforms recognized as leaders in Nelson Hall's 2025 HCM Technology and Gen AI evaluation. Lowlights. Softer revenue per client, a key factor influencing the guidance to the lower end of ranges for certain segments. This is impacting deal sizes and attachment rates. Insurance agency headwinds. The performance of the insurance agency is a drag on the PO and insurance segment. Small Business Employment Index. While stable, it is down from last year. Most important statements from CEO John B. Gibson on the Paycor integration. We continue to make progress on the Paycor integration. As best operators, we continue to identify additional expense and now expect approximately $100 million in cost synergies for fiscal year 2026. We continue to strengthen broker relationships. Cross-sales efforts continue to gain traction with broker-referred PO deals and with larger clients than initially anticipated. On AI and future positioning, we delivered solid second quarter results, begin to drive AI into our operational systems and overall DNA of the company. I encourage you to review the AI presentation, but I'll share a few highlights. We believe Paychex Incorporated is well positioned to succeed in this AI era, why we see ourselves as less exposed to AI employment risk, and how we are capitalizing on AI-driven opportunities. We are accelerating AI innovations that enhance efficiency and improve client outcomes while fueling our growth. By leveraging our unique blend of innovative HCM technology, our unrivaled data, and deep HR expertise, we believe Paychex Incorporated is well positioned to capitalize on the evolving AI landscape to drive growth, expand margins, and strengthen our leadership in HCM. On team and integration success, I'm very proud of the team and all the hard work that went in. This has been a challenging year for both the Paychex Incorporated team and the Paycor team. Everyone has to deal with change. And I've just been so proud of the team. Not only the Paychex Incorporated team, but the Paycor team. And there's no question to me that we're better together. Most important statements from CFO Robert Louis Schrader on revenue performance. Total revenue increased 18% over the prior year to $1.6 billion. Management Solutions revenue grew 21% to $1.2 billion, with Paycor contributing approximately 17 percentage points to the growth. Growth was primarily driven by product penetration and price realization, but was moderated primarily by softer than expected revenue per client. On fiscal 2026 guidance, we are reaffirming our fiscal 2026 outlook with the exception of raising our earnings expectations. However, given some of the trends that we've discussed earlier, we would now expect to come in towards the low end of the ranges for Management Solutions, PO and Insurance, and total revenue. On revenue per client trends, it's really across the board and it isn't in any one specific business. I mean, obviously, when we look at those two items that you highlighted, price realization and product penetration drive revenue growth and our revenue per client growth. And that had been strong. It just was a bit softer than what we assumed in the plan. I'd probably call out a few areas. We are seeing a little bit smaller deal sizes, and John can comment on that. We've seen a little bit less attachment up front at the point of sale. Obviously, those things impact revenue per client. In summary, Paychex reported a strong second quarter with significant revenue growth, driven by the Paycor acquisition and ongoing AI initiatives. While facing some macroeconomic headwinds and softer revenue per client trends, The company reaffirms its full-year outlook with raised earnings expectations, showcasing confidence in its strategic direction and operational execution, particularly in leveraging AI to enhance client value and drive future growth.